In today's video, let's start with a big question. Why are so many investors still holding strong onto AMC even when the media and so-called analysts keep pushing negativity? The truth is, confidence in AMC has never been higher, and what we're witnessing right now could set the stage for something massive. We're talking about a company generating hundreds of millions in revenue, efficiently managing its operations, and at the same time, forcing short sellers into one of the tightest corners they've ever been in. And if you think this is just speculation, wait until you hear what's actually happening behind the scenes. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But everyone, remember, this is not a financial advice video. Recently, a tweet from Stefan Vikstrom caught my attention. He shared that he had added more than 2,100 AMC shares to his portfolio during the price drop following Q2 earnings, and he's ready to buy even more. That single post captures the sentiment of a lot of AMC retail investors, also known as apes. Despite what we hear in the mainstream media, the majority of long-term holders aren't leaving. Instead, they're doubling down. Why? Because AMC has proven itself. The company has streamlined operations, optimized its business model, and box office revenues are projected to remain strong for the foreseeable future. This kind of forward momentum strengthens investor confidence, whether it's everyday retail traders, institutional buyers, or the loyal ape community. Now let's address what this really means. Right now, AMC is available at what many believe to be a heavily suppressed discounted price. For apes, that's not a reason to run, it's an invitation to load up while it's cheap. We know about the potential of true price discovery, and we also know about the possibility of a short squeeze which could send the stock far beyond its current levels. This is why apes keep buying, and we've seen proof of this through posts like one from Joshua Sky, where another investor revealed he lowered his cost average on AMC to just $2.76 per share. He boldly said that short-funded market makers are toast, and with liabilities stacked at that cost basis, the only direction AMC has left to go is up. Of course, mainstream articles love to spin a different story. You've seen the headlines claiming apes are leaving, that retail investors are dumping shares, and that no one cares about AMC anymore. But these narratives are nothing more than psychological warfare. Fear, uncertainty, and doubt designed to make retail investors second-guess themselves. The reality is the opposite. People are still buying because they understand the manipulation. They see the constant effort to push the price down through dark pool routing, negative news cycles, and liquidity games. Shorts have been scrambling to find strategies, but they keep running into the same problem. They can't shake the real holders. They can't locate enough genuine shares to satisfy demand, so they resort to tactics like rehypothecation, essentially recycling borrowed shares to create the illusion of supply. This is why unity among apes matters so much. The longer we hold and the more we accumulate, the more pressure it puts on short sellers. And it's not just retail anymore. Institutions have started regaining confidence in AMC as well. After staying away during the pandemic, many are returning, not just because AMC survived, but because it's thriving. These institutions have access to deeper levels of information than the average retail trader. They know exactly how many synthetic shares are floating around, they see how undervalued AMC really is, and they understand the massive potential upside when the squeeze finally unfolds. But that raises another important question. If apes, retail investors, and institutions are all buying AMC, why isn't the price going up? The answer lies in off-exchange volume. Almost every single day, AMC trades are dominated by dark pools. That means buy orders, which should push the price higher, are hidden away and never impact the market. Meanwhile, sell orders go directly to lit exchanges, where they drive the price downward. This imbalance creates the illusion of weakness, even though demand is strong. Yet here's the kicker. Even with all this manipulation, AMC's price hasn't collapsed the way short sellers expected. That's proof of resilience and a clear sign that the suppression isn't sustainable forever. Let's also talk about AMC's strategic investments. Remember HYMC, the mining company? Gold has been climbing, and HYMC's reserves, roughly 12 million ounces, have risen in value by hundreds of millions of dollars. This kind of growth directly benefits AMC since they hold a stake in HYMC. Year to date, HYMC has more than doubled in performance. And with gold trending higher, AMC's investment portfolio is looking stronger than ever. This is a crucial point. Even if someone doubts AMC's core business, which is already performing well with blockbuster releases and recovering revenues, the company's investments provide another strong foundation of value. AMC isn't just surviving, it's strategically positioning itself for future growth. Meanwhile, short sellers are under growing pressure. According to data shared by traders online, AMC's days to cover, the amount of time shorts would need to buy back all their borrowed shares, has jumped significantly, moving from 7.7 days to nearly 13 days in just one cycle. That kind of shift signals two things. Shorts are still increasing their positions, and at the same time, liquidity in real shares is drying up. When liquidity runs low, panic sets in. Short sellers don't want to be the last ones left holding the bag, so the scramble to exit could very well spark the kind of squeeze apes have been waiting for. This trend isn't just visible in AMC, it's showing up in GME as well, with both stocks experiencing a tightening supply of shares. And when ETFs like IWM and XRT rack up billions and fails to deliver, that's a red flag. These ETFs are often used as backdoors to locate AMC and GME shares, effectively manufacturing supply where none exists. The rising fails to deliver suggests the system itself is straining to keep up the illusion. Shorts are running out of creative ways to delay the inevitable. On top of that, reverse repo levels have fallen sharply, dropping to just $21 billion. That's another critical piece of the puzzle. Reverse repo facilities provide easy liquidity that short sellers rely on to maintain margin. As those reserves dwindle, margin requirements tighten. And when shorts can't meet margin, their positions get liquidated. That's when the real fireworks begin. So to wrap this all together, AMC is undervalued based on fundamentals, it's gaining traction through smart investments, and it's backed by one of the most loyal retail investor bases in history. Institutions are buying, short sellers are struggling, and the tools they've relied on to suppress the stock are slowly breaking down. The stage is being set, piece by piece, for something far bigger than the average person realizes. And that's why confidence in AMC isn't just hype. It's grounded in facts, numbers, and a clear understanding of market dynamics. Every suppressed dip is another buying opportunity. Every dark pool trade is proof of manipulation, and every tightening margin brings shorts one step closer to the breaking point. The real question now isn't whether AMC will rise, it's how high and how fast once the dam finally breaks. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.